in the UK. A very long 5 years it's been as well. I'm going to start today with dollar yen. We've breached 111 briefly an hour or so ago. We haven't been up here since March. If we zoom this in on the daily chart, we can see we were last up here. Actually, that's the 1 hour chart. That's not good, is it? Here on the weekly chart, I should say. There we are. This big spike we had in March and February when we went to 111, 112 during that last week of March. So we've been there today. General weaker dollar across the board. Not a weaker dollar, a weaker yen across the board really today. No particular driver for that. It's just a weaker yen today. Euro, pound, Aussie, CAD, all around 6-day highs against the yen itself. That's what some of those others I've just mentioned. So dollar yen here, 111. It's coming back down in the last hour or so, quite aggressively as well, but still remains big here on that 1 hour time frame. Michael's asking what direction gold is going. Well, gold's had a major sell-off in the last couple of weeks. 17. Let me find the gold chart here. Silver. We went to where's my gold chart gone? So find some new one. So Michael's asking here, what direction gold is going? Well, again, it's all about your time frame. This is a 1 hour chart here. We've declined very aggressively, as you can see here. Let's just put a different template on. We make sense of it. So let's bring this forward. That's not good. Let's go back to May. Was it going back on that? There we go. This workstation's not playing up. There we are. Right, so let me change the template because that's too busy for no, that's all the daily template. Right. So this is the day. Let's go back to the daily template. So we've had this big sell-off, Michael, since we broke the 20-day moving average, and we've moved down the last 2 weeks. So we were up here over 1900, and we've moved down very, very aggressively. So the 20-day, 50-day, and the 200-day was broke last week. We found some support earlier in the week around about this 1760 zone. So 1760 is our support zone below the key 1770, which is a key Fibonacci level from the big rally up here we had in, you see this rally here, this 61.8. If we put a Fibonacci, I can't see my Fibonacci here, we put a little Fibonacci retrace here from this rally up here to this level here. So we broke this 1760. So this 1770 level, Michael, still becomes very, very key. So we broke it, we bounced in $5, $10 lower, and we've bounced off that now. So we're back to 1780, but still looks very weak. That's quite a significant trend reversal there as we've broken under the 20-day, the 50-day, the blue line here, and the 200-day moving average. So for gold to take, to move back, to retrace this leg down, we need to break and close over the 200-day moving average, which sits there $10 above the big psychological 1800. So 1810 is the next big line in the sand for gold bugs. If you want to take next looking for some strength in the gold market, you want to break that 1810 level there. Let me put it on a different colour. Let's put it on a nice aqua and put it a nice line. We can see it later. So that's that key line at 1810, the 200-day moving average for gold to move to the upside. That's on the higher time frames. Intraday, obviously, the lower time frames, the 4 hour, the 1 hour, and intraday were still way, way, way below that. So today, if we come down to the 1 hour time frame, we can see why isn't that scaling? Anyway, those Fibonacci levels still in play and have been all week. So the 50 sits there at just below 1800. That's 61.8 at 1770, and we're now within those channels. So lots of consolidating around this 1780. So it's a bit directionless, Michael, to answer your question. All right, lots of questions coming in here. Emma says hello. Emma's asking about Aussie. Aussie dollar today has been relatively strong. Let's have a finding. Yeah, I don't know why that's defaulting like that. So 75.80 we trade with the Australian dollar. Again, as you can see here, this 1 hour time frame generally buys to the upside. Although we've had if we got the daily, we see we've had a strong US dollar last week or so. We've turned around the last couple of days, but again, another one that's playing with its 200-day moving average down here at 75.50. So we're broke over that yesterday, and we're moving higher today at 75.80. So intraday, Emma, you see we've moved here. That would have triggered long yesterday using this moving average strategy there. We're over the 50 period, over the 20 period, and trekking higher. So from yesterday, around about 7 o'clock yesterday, it's continued to move higher. Trailed your stop loss up. That would still be taking you higher. But first resistance is showing its teeth now. That's that 75.95 area for that 200-hour moving average. Now then, I haven't got enough for some reason. We haven't got enough. Charts open. There we are. Aussie, there's the Aussie on Aussie on the daily. So the Aussie on that daily time frame that moved down, and we zoom in. You can see, this is our move. This is a move up we've just looked at, and that continues to move higher. So it's supported by the 50. The moving average is all right, so that's trending higher. Just waiting for the first resistance is there for the Aussie pair. Okafor is asking about US indices today. Well, we've had lots of volatility. We had closing all-time highs yesterday on the NASDAQ here on the USA 100. So we've broken over our all-time high here at 14,150 area. We got to the first Fibonacci extension, the 123.6 Fibonacci extension here. This is from last week when we were looking at this, remember? That's not, let me zoom that out a bit there, we couldn't see that. So got there, that's 14,375, which we've sort of tempted today. The main target now for the new high would be the 161.8 extension, which would take us all the way to 14,780, another significant leg from where we are at the moment. But at the moment, that remains bid. As far as today's concerned, if we just zoom, can I zoom this in on the daily? No, zoom it out. I should have checked these charts. You can see this is the NASDAQ, but if we look at the S&P 500, for instance, we saw a significant decline here last week, still in our channel here. So we had this big sell-off here on Friday. We bounced back aggressively on Monday, interestingly engulfing the previous sell-off on Friday. So that's a positive, and that's followed through yesterday, Tuesday. We didn't get to closing all-time highs on the USA 500, but certainly we're moving ahead again today, and we're higher again today from when we were yesterday. So that sell-off on Friday has been taken out this week. But for this particular index to go high, we now need new all-time highs again, both intraday and on an end-of-day basis. So USA 500 also on the bid, and I haven't got the 30 here, but the DAX and others. But yeah, the US markets seem to be relatively well bid today. Obviously, we're still an hour from the cash open, but the futures here you can see 4,250 on the USA 500 and the NASDAQ, the USA 100. Currently trades on the futures market around 14,278, so just down from yesterday's highs. Mohammed's asking about the euro dollar here. Let's start with I should do it the other way around this. Let's start with the 1 hour time frame. So euro's been moving up generally over the last couple of days, having had that big sell-off courtesy of the Fed last Wednesday it was, wasn't it? They came out and suggested that there will be rate rises, 0.25% rate rises in 2023. That's shocked the market. So we've been teetering around 121.50 earlier in the week. We moved down very significantly under the 200-day moving average. We bounced and moved up. So we went as low as 1840 here. I'll put that on this chart here. I was looking at this earlier. 1840 on Friday, Monday, and then we've recovered today. But for euro to move forward, there's the 200-day moving average. It's a weak break of it so far today. So 1940 is our key support today. So we need to hold over 1940 if this is still going to remain biased to the upside, as we have been for the last 3 days. Remember, there's a whole host of data out there. So we haven't mentioned the data at all yet, but lots of PMIs this week. We've got durable goods later. We've got the final reading of US GDP. We've got PCE. Remember, the Fed's preferred measure of inflation on Friday. So euro really needs to hold this 200-day moving average there at 119.40 if it's going to remain to the upside. Intraday, 4 hour looks a bit stronger, doesn't it? We've moved the floor here, that 1845 area. We've moved up, but first resistance is that 50 period moving average there at 1986, and then the 200 hour there at 120.80. So quite a significant move for the 4 hour if it's going to move back up. Intraday, let's say the 1 hours we started, we've been over the 20 hour, under the 50 hour. We're generally sort of meandering our way higher, aren't we, till some strong data teaches otherwise. The Euro PMIs were a bit mixed. The German ones were better. French were a bit of a miss. UK ones were a bit of a miss. We've got the US ones later on today. So generally, Euro moving higher. Intraday, the 200-hour moving average, it's all the way up there at 119.85. So that's your first resistance for Euro to the upside. CAD Yen says, promise. CAD's been really strong today. It's been outperforming. Dollar CAD itself is up over 1.5%. Let's just look dollar CAD first from Monday. So this is what's this? This is a 1 hour. So this is Monday here. We were all the way up here, 124.75 for the dollar CAD. We rallied strongly on the back of the Fed last week, and then Monday we were down. Tuesday we went sideways, then down into close, which is always relatively negative. Then we've gone sideways in the Asian session, and then we've gone down for the rest of, or so far in the European session. So we're under our 20-hour moving average there. That strategy would have triggered short there yesterday around 1900 hours. We've break of the 50 and the 20-day period moving average into the 200 hour, and interestingly, in the last hour we've broken under that 200-hour moving average. Well, so it continues to move down. MACD remains weak. But you were asking about CAD Yen. So we've had a strong CAD. The point was we've had a strong CAD. We started our session promise talking about a weak yen. So this pair of probably will have moved. I haven't actually looked at this cross, but this pair pretty sure will have moved quite significantly today to the downside. So let's just find it here. CAD, Swiss CAD. Where's my CAD? There we are, CAD Yen. Let's put that crossing template on it. You can see what a strong move we've had. So this is Monday down here at 88.10, and here we are at 90.25. So a strong move to the upside for CAD Yen. That's CAD, having a strong day yesterday and today. And you see that's been added to by the weakness of the yen today. So the move up. This comes after we've rallied quite significantly during April and May, topping out around 90.80, and then we've sold off in the last few days, but we reversed that again quite positively. So here on an end of day basis, for instance, if you're trading this with this particular setup, that would have triggered a. In fact, it hasn't triggered short. You would have been short down here. That hasn't triggered long yet, although the candles are above the hang on, what am I talking about? No, it hasn't. No, because the 5 and the 9 look like they may cross today. So that looks like it may be looking to try and go long on the close of business today. 190.25 is where we really want to close over. But really, a more comfortable close would be above this 90.60 level. That's really the resistance there on the end of day basis. 90.60 there, promised to the upside, but that's recovered quite aggressively. I don't know where you've been long or short, but we've been up, consolidated, down, and retracing quite well. So for this retrace to follow through, a break of 90.60 on an end of day basis promise. I was asking about the Aussie on the 1 hour. I didn't look at the Aussie on the 1 hour. Aussie on the 1 hour, it's sort of oscillating high, as you can see here. We're going dipping and then up, dipping and then up, but our highs are getting higher, our lows are getting higher. That's a sort of a biased uptrend. And as I say, the main first resistance here for 1 hour traders, Emma, would be that 75.95 level there, where that 200-hour moving average is. Okay. Michael's asking, what direction is dollar CAD? Well, we just looked at dollar CAD. Michael, as we just said, it's very much to the downside all week so far. We started let's go to the daily actually. Let's go to the daily, see what happened last week. So a big rally for the dollar on the back of Wednesday's announcement. So this is Wednesday. Wednesday we broke back over the 50-day moving average, up and down, but a clear tweezer top, well not clear, but very relatively strong tweezer top there on Friday, close of the week, and Monday, opening of the week. So we rejected any high. So we rejected getting to 125, the big psychological number 125. Didn't get there, and we've been down Monday, Tuesday, and now Wednesday. We're currently just above the 50-day moving average, so we need to break 122.50 to move lower under the 50-day moving average. But certainly this week, as we just saw on the 1 hour time frame, it's looping lower again. So again, lower highs, lower lows. That's a trend, lower. And here the 1 hour time frame, as we speak, has just broken the 200-hour moving average, which is another weaker sign. So 122.70 is where we trade at the moment. Where's the next support? Well, if we got the 4 hour time frame, we're under the 50 period moving average for the 4 hour candle. So that's your candle that started at 12 o'clock. It's got 15 minutes to close, but that would have taken you'd have been short here on the 4 hour strategy there yesterday at 8 o'clock last night, sideways most of it, but down again. And the 4 hour next target support area would be 122.15 on the 4 hour and 1 hour time frame dollar CAD. Michael, hope that's answered your question. Right, lots of questions coming in. Best scan reports, Ram. I'm not sure what you mean by that. Do you mean the best scanning software or package? Have a look at the auto chart. That's a really, you can get the default email that they send out 3 times a day for the start of the key trading sessions, but you can adapt it to your particular strategy, your particular pattern identification, your particular time frame, your particular assets. So I really like auto charts. Have a look at that. It's free to download if you've got I think it's $200 in your account to make sure you've got that. Wise Ninja, good afternoon, my friend. How are you? Hope you're well. The DAX asks Zwam. DAX followed the FTSE higher yesterday. It cooled a bit today. I've got my DAX here, the GER 30. Let's go to the daily time frame. So start with the daily. So we're trending sort of higher. You see the highs are getting higher. Some volatilities we just saw on the S&P 500. Understandably, that's filtered through to the European markets. Obviously, the DAX, remember, is quite closely correlated to the euro. Not really nailed on, but it's only 30 industrial, Germany's biggest company. So again, it doesn't take much either negative or positive news for some of those 30 companies to really sway this particular index. But the DAX is a really good intraday trade. It's a really good end of day trade. I really like the DAX. And as you can see, just like we saw with the S&P 500, we found support at the key 50-day moving average, as we have had throughout all of this rally. This is going all the way back to 2020, beginning of the year. As you can see on the end of day time frame, see how the 50-day has really been your friend. 1, 2, 3, 4, 5 times. We've into it, we bounced off it, into it, bounced off it. New highs, new highs. We went down on Friday. We came back on Monday, though, interesting. But unlike the S&P 500, the close on Monday was below the open on Friday. So that's not as bullish as the S&P 500 calendar. The S&P 500 candle was on where's my cross one? There we are. On Friday. So we came down last week. Big bounce on Monday. We're failing to make a big move up. It's still relatively positive because we've covered it's nearly 60% of that down candle, even though we tested lower. We opened down here, so it was a negative start to the week, but we moved up. So we'd really like for a bit more positivity from the German stock market, we'd really like a close sometime this week above that key Friday level where we start to fall. So 15,700 line in the sand for DAX traders on an end of day basis. I don't know what time frame you're trading this one, but that's the daily basis. Still sort of aired to the upside, but stuck right on that 20-day moving average. So a little bit of lack of direction. PMIs have probably helped some of the German companies today. The German PMIs, I say, were a bit better, but we're down here at the moment at 15,588. The 1 hour intraday, if you're trading this intraday, really skewing through. That's a messy chart from a trend following point of view. That's really very much an oscillators game. We've been down to the bottom of the Bollinger Band. The Bollinger Band is starting to edge lower. So again, it's biased lower from about lunchtime by looks of things. What was that? That candle was 11 o'clock this morning. So just before lunchtime, server time, we've been biased lower. We've bounced a wee bit at the moment, but again, for this to move higher on the US Open, we need to break over 15,600. That's that 200-hour moving average to take that higher and test the day higher the day. Otherwise, we're still sort of biased to the downside for the DAX. Arando, sorry, I haven't pronounced that correctly. Can you comment on the guppy, the pound against the yen? Well, again, I say the yen's had a weak day today. If we're trading in today, the euro, the pound, Aussie, CAD, all those crosses were all around 6 day lows, 6 day highs, depending where we are. But pound guppy, pound yen, 6 day high earlier. As you can see, retrace bouncing off. So we moved down. Again, another strong engulfing candle pattern here on Monday. We'd been down Tuesday, Wednesday, Thursday, Friday last week from the this consolidation around 155. We sold off quite aggressively. We went to 150 things. And here, this is the end of day, remember. And we've been up Monday, up Tuesday, and we're currently up today. It's back over its 20-day moving average in the top half of that Bollinger Band. But as you can see, again, the bias is really to the upside. The 50-period moving average again, 50-day moving average tested and broke for the first time on Friday since, well, let's zoom this in. When we were last on this blue line, we go all the way back here, look to the left, and we last closed under the 50-day moving average for the pound yen all the way back here in December 2020. So it's been a strong, as it has with most sterling crosses, it's been a strong 2021 for sterling against the yen. The yen's had a weak day today, so this exaggerated move down last week has been taken out. Zoom this up again. And these very aggressive V-shaped moves in candle patterns are not a particular, can be viewed both ways. At the moment, it's a bullish move. We need to break over 155. Really, for me, or from this chart, we'd want to, that high we got here at 158.88 back at the end of May. So we'd like to push for a new June high if the guppy pair, the pound yen, is going to move higher. Remember, the other acronym for pound yen is the Widowmaker, because it moves around an awful lot. The ATR is probably one of the highest of the major crosses. So watch when you're trading pound yen. But positive this week, positive today. An end of day trader would like to see that 155.88 broken to take that to new highs, but first resistance is to hold 155 itself. Good evening, Dr. Prasan. How are you, my friend? Hope you're well. India struggling, I understand, at Lords against New Zealand. I'm assuming you're a cricket fan. It's a very poor assumption if you're not. Reen, hello, how are you? Long time no see, didn't see you last week. Gold on the 1 hour time frame. Have I got a gold chart here? I hope so. What did I do with it before? Oh dear, it was at the end, wasn't it? So gold, very volatile. Intraday today, a bit boring to be honest, Reen. I can't get excited about that, my friend. We're just tracking sideways. We're tracking through 1780, so we need to break this range. These key Fibonacci here levels here from the higher time frame, the daily time frame. That's the other key level. So we need a break of this initial range here. If you're a trend following trader and you're trying to trade the 1 hour time frame, just stay out of it at the moment. If you've got an offset, if you're a mean reverting type trader, you've got some nice tops and bottoms to trade. So depending on how you trade this, you've got the top of the Bollinger Band, which sits at 1784. You've got the bottom of the Bollinger Band, which is your support at 1776. So there are the ranges. As you can see, all of today we've been in the upper half of the Bollinger Band, even though it's going sideways. So we're biased higher, but it's not really very exciting. So 1780 is where we rotate, and that's about as excited as I can get about gold today, Reen. But don't hold your breath. Gold can move really, really aggressively, as I'm sure you're aware. Fridays, Tuesdays, traditionally can be quite big moves for gold, but we've had some huge shakeout. Again, as a gold trader, I'm sure you're more than aware. Through that 1770, 61.8 Fibonacci level, and lower to 1760, and now we've bounced up a wee bit, but just consolidating so far this week, the gold market. And that's Mohammed's asking the same thing about gold. Hopefully, Mohammed, you've got the same thing about that. Wise Ninja, dollar yen. Well, as we said earlier, it's been a weak day for yen, and I started about half an hour ago with the yen chart because for the first time since March 22nd, the dollar yen pair has broken 111. Big psychological numbers. Don't underestimate, guys, the power of round numbers. So 111, 0, 0, 0. We rally to it for all of this. Well, since last week, basically, when the Fed surprised the market with that move in the dot plots. We rallied, and look what's happened. With lots of targets probably being bagged, lots of pips being bagged, and in the last hour we've shook out very, very aggressively. No particular news from either. Actually, it might have been the news about some of the Russians messing with some British ships in the Black Sea has added a bit of a lift to the yen. But basically, yen's been very weak today. It's turned around in the last hour or so, but 111's been hit. Lots of automated traders would have triggered, lots of algos would have triggered at 111, bagging all those pips. So it's turned around. As far as where it's going for the rest of the day, well, we've got support, which has already been tested at the 20-hour moving average, the middle of the Bollinger Band there at 110.76. But that still looks relatively big to me. But a lot of the action might have already happened today, given we've had that move to 111. So are we going to test 111 again? Who knows? Support is that 20-hour moving average, and then below that is the 50-hour moving average today at 110.60. Bottom of the Bollinger Band a bit lower at 110.50, and then the 200-hour sits all the way down there at 110.21. MACD remains positive. RSI has been over 70. We've dipped a wee bit, but still biased to the upside. That's all I see on this little chart. You can't see the RSI, can you? Because my ugly mug is in the way. But that's dollar yen, dollar CAD. We fan sport Ken. Again, another one that's had a strong day. Canadian dollar, Japanese yen, strong day today, outperforming 1.5% move plus since Monday for dollar CAD. Here's the 4-hour chart we looked at earlier. That would have triggered short just yesterday at 8 o'clock on the 4-hour time frame. 1-hour time frame would have been short back here on the 21st at 1300 hours. It's gone short, then it's consolidated, it's gone down again, it's consolidated, it's gone down again. We've broken through, so that's still trending lower. Remember how low we did go for dollar CAD? We went all the way down here, didn't we? 120.30, 120.30, 6-year low dollar CAD. So we've rallied from that, courtesy of the Fed, over the 50-day moving average now, and now that is coming in back as support. So we're up through it. Tweezer top on Monday, Friday, down Monday, down Tuesday, down today so far. Support comes in at 122.50. If that breaks, next there's a lot of black space under there, isn't it, or white space, depending on what your candle. Depends what your charts look like. But then it's that support there, 121.65 dollar CAD. CAD yen. Did we look at CAD yen before? I can't remember now. Sorry, I haven't looked at any of my. These are all friends from Facebook. Let me have a look at. Friends from YouTube. Let me look at Facebook. See if there's any of you there. I'll come back to CAD in a minute. Let's have a look. Can you please analyse the Nasdaq? Andrew, I talked about it before. I hope you're still here. Who knew something like this was going to? Oh dear, spam. Don't spam me. Don't waste your time. I'm not going to talk to you. There's lots and lots of things you can trade, guys. Thousands of assets. You need a strategy. You need an approach. You need a system. You need to understand risk management. You need to understand yourself more than anything. Yazin, what do you think about pound yen? We just did pound yen and Kiwi yen. We haven't looked at Kiwi yen, Yazin, and you asked that 10 minutes ago. So let me look at that for you now, my friend. So Kiwi yen, let's have a look. Where's my chart? New chart, Forex. Let's have a look. Kiwi, where's the Kiwi going? Kiwi yen, let's have a look. So that's a volatile one, isn't it, on a 1 hour chart? Is that why you're interested in it? Oh, templates, use our 5 and 9 crossing template. For some reason, it takes me all the way. So that, Yaz, is a bid really from this big down move we had last week. A floor on Monday, so we've been up Monday, up Tuesday, and up Wednesday. So yesterday, classic example why these moving averages, are so key sometimes. As you can see how we've moved up. The highs are getting high, but we haven't gone in a straight line. Nothing happens in a straight line, obviously. With anything in life, does it? Nothing goes in a straight line. So we're up, we've consolidated, we're up significantly higher leg yesterday. The ascent has been relatively okay. It's not been too steep, it's not been too shallow, but we've consolidated patiently at the 200-hour moving average. We broke over it significantly this morning here at 10 o'clock. Big candle. Remember, size matters when it comes to candles. Lots of little candles overnight. Broken higher from the high of Tuesday. So we've broken over Tuesday's high. Then we're higher, stalled higher. So we're still moving higher. We're at 78.15 at the moment. We're over the 200-hour moving average. The other moving average, the faster moving average, are all nicely aligned. See how they're sloping up quite nicely. So we're moving higher, 78.12. Obviously, the next big round number will take us to 78.15 here for Kiwi yen. Where's this one here? Kiwi yen, one of the favourite pairs for carry trades. Some big players in this currency pair. Lots of retail traders avoid it because of the spread sometimes, but lots of big players play with the CAD yen, all to do with the differentials in interest rates. So as you can see here, that 78.50 we just talked about, which is within reason today, takes us all the way back to the 17th. So that was when? That was last Thursday? Yes, it was, wasn't it? So that's our next sort of target area if you're still long this from this break of this 200-hour period there, Yazin, my friend. Okay. If we look at the daily time frame, what's the higher time frame? Well, the higher time frame is still big because the highs are getting higher, the lows are getting lower. We're still trending high. We're above the 20-day moving average. We've tested it all the way through May. We've tested it a couple of times in June. We did the same in April as we broke out. Nicely aligned. So that's just trending higher. And again, trend following traders will have just been in that trade, adding to their position as we move to new highs. So 80 here on an end of day basis. We need to. Lots of strange looks in the office at the moment because it sounds like it's raining. We're like it's the 23rd of June and it sounds like it's raining outside. It looks very, very hot, but June showers, who knows? So 87, so 85.50 today for CAD, for Kiwi yen here. Sorry, 78.50, and then that daily time frame, that next. Oh, hang on, that's the wrong chart. What happened then? Yes. Oh, Kiwi yen. This is Kiwi yen. So this is the daily. This big bounce back. So that's 78.50 is where we're looking for. Kiwi. Yeah, that was Kiwi yen. End of day. Yeah. So I don't know what chart I was looking at there. It's gone back. That's one. So still big. So 78.50. Let me just go back to confuse myself. 4 hour is at 78.50 again, and the daily. There we are. That's 78.50 is where we want to get to. That's the 20-day moving average. 78.50 key. Yazin for Kiwi yen on this big bounce back. Where did I get to? CAD yen. We did CAD yen, didn't we? Did we do CAD yen, Koshi? Oh, I've lost where I am now. Did we do CAD yen? Anybody tell me I talked about CAD yen? So we should be here. If I did. CAD yen. Yeah, there we go. It's tracking high. Another one over its 200-hour, tracking higher. On the 1 hour, we got the daily. Same bounce back, same this CAD move. The weaker yen, stronger CAD, bid to the upside. Pound Swiss, as Anna's. Pound Swiss. Interestingly, Andrew and I were talking about that just this morning, so I won't say any more than that. But anyway, let's have a look on this. I've got it on this workstation, so just give me a second. New chart, pound. The pound Swiss is what we're looking for, isn't it? Pound, Aussie, pound CAD. To me. Can't see it. I can't see pound Swiss. Anders, I'll get your email. I'll send you a little email analysis, okay, afterwards. Sorry about that. Johnny, Johnny's saying here, am I speaking too quickly? Okay. New trader here. Hello, everyone. Can you explain in layman's terms what pair he's saying to take, buy, or sell on at this time? I can't keep up. Jenny, I can't tell you what to do. I'm just giving you a very quick technical analysis of the pairs you're interested in. Okay. When it comes to trading, come onto our website, hotforex.com. Come onto our education portal and look at the training videos. Look at the ebooks. Follow their webinars. Follow the video courses there. But principally, have a look at the webinar I did yesterday, because this business is very much about knowing yourself. It's all about risk management and understanding yourself, okay? And you've got to do that first and foremost. So make sure you understand the basics before you start risking any of your own live money, okay? He's not saying what to... Oh, there you go. He's not saying what to buy. So there we go. I noticed, Jenny. People telling you what to do, Jenny. Be very, very careful. There are lots of unscrupulous people out on the internet, so be very, very careful what you hear and what people are saying. What's your take, Sabuzi, on the The Swissy, well, 90 had been a key line in the sand for the Swissy. I don't know, I've got it here. There it is. So the Swiss dollar here on the end of day basis, like all the dollar crosses this week, has as weakened. This pair's obviously gone in the up direction because we've got dollar here against the Swiss franc. So we'd been down here, we'd been under 90, we've been testing 98.50. We've been trending lower all spring into the beginning of the summer here, and we waited on the Fed on Wednesday, and just like we've seen with the other charts, a big rally up. As you can see, the dollar's held most of its gains against the Swiss and against the yen. We saw about the yen being at 111 earlier. So these key safe haven currencies of the Swiss and the yen a bit under the pressure. So the key break was obviously Wednesday. Thursday took us through the 200-day moving average from the break of the 20-day and the 50-day moving average and that range on Wednesday, and we've held it. So key support going forward for this pair is that 200-day moving average, which sits at 91.30. But to break higher, we want to break the momentum of the rallies, and the rally stalled at around 92.25. So there we go, 92. That's 92.30. See that the intraday high there. So we want to break this level to take us higher. If the 91.30 level breaks to the downside, we'll start moving and retracing the gains from the Fed. But remember, that's a very significant announcement from the Fed. Surprised the markets, which is why we've had such an extended move. And also remember the flip side of this pair, the Swiss National Bank, they're very much in a accommodative state still, and keeping pumping to keep the Swiss economy going. So they're not taking their foot off the pedal anytime soon. They're all saying, across the board, the central bankers, that the inflation is only transitory, is only temporary. But anyway, upside 92.30, downside 91.32 for the Swissy. If you want a tighter time frame, Paul, please let me know. Wise Ninja, just listen and he will tell you the direction of the market. Wins Wise Ninja. Nice words, my friend. Thank you very much. It really is, it's not just what you can see on the chart for everybody. Obviously, that was it's the big significant fundamental news you can see very, very clearly on the chart here, can't you? This big candle here, not a lot going on for days and days beforehand, generally tracking lower, and then all of a sudden, big surprise to the market. Markets don't like surprises. Realigning, so we rallied, and then rallied again, cooled. Where are we going to go? Well, at the moment, technically and also fundamentally and emotionally, that big 200-day moving average here for this particular chart is key. So, don't overcomplicate things, guys. See where we go from here. Just explanation, not a setup to buy or sell. All right, Charles. Okay, fair enough. Harmes, right. Depends how you want to trade or how you approach trading. First and foremost, as I said in my webinar yesterday, and say many times, you have to understand yourself first and foremost, because trading, investing, certainly trading on the shorter time frames, it is quite emotional. It involves fear and greed and all those human emotions. So understand yourself, understand your risk profile. What can you cope with losing? Because in trading, you lose a lot of trades. Watch the webinar tomorrow, and I'll explain how you can still get things wrong half of the time. Five trades out of 10 you can get wrong and still make money. Doesn't sound right, does it? But it's true. If you manage your risk correctly. Most people don't manage their risk correctly and can't physically and emotionally cope with only getting things right half the time. It's just not in our psyche, it's not in our makeup. So you need to get all that soft stuff right first before you even worry about looking at charts and candle patterns and all these lines and moving averages and indicators and all that sort of stuff first, okay? Do things in steps. Go to our website, have a look at the education portfolio, look at the the video course, and watch that very, very first one on the basics, those 6 key basics of trading. Leverage, margin, spread, lot size. You've got to understand those very, very basic blocks of trading before you risk any of your real money. So have a look at that. Keep in touch, Charles, and the very best of luck. Doug is asking, have a look at gold. We did have a look at gold earlier, Doug, but I've just got your question. So I'm assuming you only just got here, or if you've been hanging around and you've been very patient. The story hasn't changed between now and then. We went down to 1770, then we went lower to 1764. We bounced off that, and on an intraday basis, Doug, I don't know what time frame you're trading it, my friend, but it's really just a bit boring the last few days. We've gone sideways. We're rotating through 1785. We're waiting for some sort of direction. The range, the activity, the volatility has narrowed, which is why the Bollinger Bands here have narrowed. Remember what the Bollinger Bands are? They're a measure of volatility. They're a measure of deviation from the moving average, deviation from the mean, the average. The standard deviation is what it measures. 2 standard deviations on from the average over the period of your candle countback. So here we are, just within that standard deviation. Biased a bit to the upside, but 1780 is where we rotate through, and it's not really moving much to the upside. Widowmaker, I was calling it the house taker. House taker, Widowmaker, absolutely same thing, isn't it? Pound, the guppy, the pound yen, big mover with a big ATR, big average true range, average daily range. Same with the sterling against the Aussie and the Kiwi. They move a lot of pips relative to some other pairs. Doesn't mean that they're any more volatile. It just means that they move more because that's how it's set up. So make sure you understand all those nuances about the thing that you're trading, whatever asset it is. Because trading forex is a subtle difference to trading equities. Trading equities and CFDs is a subtle difference between trading futures or options, or even buying the stock itself and hanging on to it. Because you become emotionally. If you've bought a stock, you've invested in a company, you've paid a lot more capital than you do when you have to trade CFDs, because you've got to pay for the whole amount of each stock. You get emotionally attached to it because you get your bit of paper and you want it to go up because you bought it. You're not buying it for it to go down. So understand all that soft stuff about trading before you risk any of your real money. So house taker, indeed, wise. I do Forex live streaming on a London session, says Psycho Forex Trade. Well, good luck, my friend. I hope things work out for you. I'll watch the stream a bit later. All right, you two are having a conversation. Fair enough. Will the rule change on 628 in gold in Europe about Basel III? How will it affect gold? So I don't know what that is, to be honest. I should probably, but that's missed me. In fact, it's got Basel III on it. Sort of makes me a bit twitchy. It's obviously serious. Perhaps I should go out and find it. I'll go upstairs and speak to my compliance colleagues. I love going to speak to my compliance colleagues upstairs. And I'll find out for you, Sabuzu. I will send you an email. The 628 rule. Is that a rule change? 628 gold. Anyway. Russia was in the news. Flying aeroplanes and missiles at British warships in the Black Sea, apparently. Anyway. Martin, the peso. I haven't looked at the peso, Martin, for a long time. So let me have a look at that. A lot of the emerging market currencies, the rand, the peso, the ruble, we just mentioned the ruble, have been hit disproportionately. We've been looking at the dollar move against the major crosses. The emerging market currencies have been hit quite significantly. Remember the Turkish lira, for instance, was at all-time highs earlier this month, and again they've come. Lira came back a wee bit, but it's weakened again. Obviously, since last week. And what are we looking for? I'm looking for the Mexican peso. Dollar rand, dollar Turkey. It's disappeared as well. How has it gone? Come on. There it is. Peso. Let's put skip the templates the same. So everyone see we're comparing like for like. This is the 1 hour time frame. I don't know what time frame you trade this one on. Obviously, the spread on these emerging market currencies. obviously wider than you trade the majors, but they move just like most other trading pairs we've got. So very similar pattern as you might expect. The dollar rallied significantly last week. As you can see, it's a bit more of an exaggerated move, as we've just been talking about. It started before the major move on Wednesday. Where's my cross it over hashtag on there? So we've been trekking lower here. But the first signs of life was before the Fed last week. So Monday, Tuesday, we were testing that 20-day moving average. We broke through it. Then we broke through the 50-day moving average the day before on the Tuesday. So we'd had a good week already before the Fed. Then we rallied. Dollar rallied through the 200-day moving average. Then we've cooled, and we've cooled again this week, much like the others we've seen. So we're coming back down again now, but now support is there to the downside at 20.07 really, where the 50-day moving average. I can zoom that up for you. I don't know what time frame you're trading this, my friend. It's exotic. It is exotic, Wise Ninja, my friend. But support sits there, 20.80, 20.08. 300 is the support. That's the 50-day moving average for the Mexican peso. Resistance has been tested and breached, but only for 1-2 days. Third day we were broken back under it, so resistance sits there at 20.430. So 20.430 is the upside target. Downside support sits at 20.800, and that's looking. So this is our third day down at the moment. That's looking to continue to move to the downside. It is Ninja, my friend. It is quite exotic. CAD yen. Did we do CAD yen? Kagossi? I can't remember. I think we did, didn't we? CAD yen, it's here, so we must have done. Yes, it's that move around. Yeah, that's that 95-60 area. So, yeah, hopefully. Kagossi, have you got CAD yen? Are you happy with what we talked about? This is the daily. Let's quick recap. If we didn't, we've moved down and bounced back up. So 90-60 is the area you'll be looking to the upside. The 1 hour time frame, that's been trending higher all week from this big move down last week. So Monday up, Tuesday up, Wednesday up, and moving up nicely. The daily, it's that bounce back, those 3 days up now, and 90-60 is the next upside for CAD yen. Don't be afraid to hit the like button. Ninja, I should say all that, shouldn't I? But I've got a bit of a fan here, I think, Wise Ninja, my friend. Very interesting. Do you think the price of Shiba will reach 1 cent? I don't know. I'll pass. I'm not going to get drawn on that one. I don't know. Euro yen, Jahwumba, just like we said before, the yen's had a weak day, and Euro yen is no different. Euro yen's up to these 6-day highs earlier today. Where's my Euro yen chart? Euro yen. I can't see it. Let's open a new one. New chart. Forex. So let's have a look. Let's put that template on. So, like many of the yen crosses, we've had a big, strong week this week for Euro yen, having to move down. So again, another V shape under the 50-day, bounce back through the 50-day. Needs to move back over this rally this week is going to continue. We need to break over 133 Euro yen. Remember, lots of data still to come this week. PMI's all out now. We've got the Bank of England Thursday. Durable goods weekly claims out of the US tomorrow. John Andrews tomorrow, and all that data is coming around. GDP as well from the US. Final read, not perhaps as significant, not that market moving as most GDP announcements are, but still key tomorrow. And then Friday is PCE. Remember, PCE is the preferred measure of inflation that the Fed like to look at, so PCE will be key. So Euro yen, Chukwumba, we need to go back through 133, big round number again. It's also where the 200-day moving average is. And then we would be looking for this recent high, the June high, which takes us to 134 basically. So two big round numbers for Euro yen traders to the upside. To the downside, we've got immediate support, which is where we came in today at the 50-day moving average there at 132. So three very simple numbers, big round numbers to look at for euro yen traders. 132, 133 initial target, and 133 for this June high if we're going to move back up. But we need to retrace that move down. And again, it's another classic little, just over a period of a few days, we're going to put a little. That's our move down. That's our Fibonacci level. That big move down, and there we are. You think I did that by magic, didn't you? But where we trade now, 132.50, 132.55, it's right on that key golden ratio, 61.8 Fibonacci level. So break and hold of that level today, 132.50. We'll bring in the 20-day moving average at 133. And then perhaps a break over this range here when we've been going sideways at 133.50. So again, big round numbers in play here will take us to 134. Keep it simple. Don't overcomplicate it. Have a plan, trade your plan, accept your losing trades, and bag your winning trades, and repeat as many times as you like. But always manage your risk. Did you speak on indices, Bajan? Yes, I did indeed speak on indices. They've been very interesting, their moves. We had a big sell-off on Friday when we had one of the hawks of the Fed following the hawkish tilt by the Fed on Wednesday, Mr. Bullard, a hawkish spin, which took the dollar higher and weighed on equity markets. So there's that inverse correlation between the dollar and equity markets. So the USA 500, remember, the world's most important stock market. Big sell-off here on Friday. Bullard's comments didn't help. It was the end of the week as well. But we bounced back, and we bounced back with a big engulfing candle on Monday. We closed higher than we'd opened on the down move on Friday. That's a positive spin. We followed through yesterday. The Nasdaq, the USA 100, posted a new all-time high yesterday. The S&P 500 didn't, but we're still bid to the upside. So the bias remains positive for equity markets, even though we're in the doldrums of June. We've had a rally in April, strong rally in May, as you can see here. It's the daily. This is March, up, April up. Bit of sideways action in May, and we're still really sideways action here in June, but we're consolidating at highs. There's all this chatter, depending who you listen to, depends on what you read. Some are saying the market remains very, very overvalued. Technically that's correct, but at the moment we still keep going up. So there's no particular big shakeout requirements or big sell stories that's making equities move down. We've tested the 50-day moving average. We tested it there, we tested it there, we tested it there, we tested it there, and we bounce off it each time. Traders, investors, portfolio managers clearly buying the dip, and so we're moving back to the upside, and currently 4,250 is where the USA 500 trades. Bajan, if you want any more details, please ask. Maria. Good morning, Maria. I'm not quite sure what that means, but good morning to you. Pound Aussie and Euro odds on the 1 hour, says Reem. So pound Aussie on the 1 hour. Pound Aussie has drifted. Oh, it's a bit messy, isn't it? That's a 1 hour, Reem. Zoom that in a bit. Running out of steam. What's that? Where's that? It's run out of steam this week, bad lots of things. Let me lost my perspective of where we are on that. Let me put the days up right. So Monday was up, Tuesday was up, and consolidated down. Not clear there, Reem. This strategy would have taken you long, and that would have failed. It would have taken you short. The last trade this would have been short here this morning at 12 o'clock. At whatever that was, the break of the 184, and then you've taken all the way down there, so you'd have taken a fair move down for 1, 2, 3, 4 hours. Then we bottomed there at 184.40, and it's looking like it wants to turn up, but we're still, as you can see from yesterday, we're really sort of biased really to the downside. We got A high there early yesterday morning. The high here yesterday afternoon was lower than the high yesterday morning. The high this morning was still below the high of yesterday. So although it was got quite volatile earlier today, it's still trending lower, and the lows are definitely good. See how the lows have got lower as well. So the low today was all the way down there at 184.30. Big support sits below that at 184 itself. So it's still sort of biased to the downside. It needs to break over this and hold into the top half of the Bollinger Band. It's a good example of the Bollinger Band trading there. We were in there for a few hours yesterday and went down. We were in all those hours in the lower half, a couple of hours in the upper half, and then 5-6 hours today in the under half. So the buy overall, it's ticking lower. Thank you, Pooh. I don't know if you're talking to me, Maria, but thank you as well. Risk 2 to 1. Are you talking to risk? Yeah, risk reward ratio. We talked about it yesterday. Good morning. Morning, Sonny. How are you? Good afternoon. Tell them no. Why is Ninja you are funny? Haran. Swiss, dollar Swiss. We looked at dollar Swiss before, but it's the first time I've got to your question. You've only just asked this in the last 5 minutes, so I guess you just joined us. Dollar Swiss. Here we are. Dollar Swiss. Haran, any particular time frame? If not, we'll start with the daily time frame. Like many of all the dollar crosses, but strong move last week, cooled this week. We're over we just talked about this, haven't we? Haran, I know you weren't here, but anyway, let's do it again. 200-day moving average is our support now, which sits at 91.30. If it's going to hold this break higher, below that is the 50-day moving average at 90.70. Looks pretty strong because we've broken out of this consolidation phase here at the end of May and the beginning of June, waiting for the Fed. Fed's moved up. The other thing that's helping this is that the Swiss National Bank still remain very, very accommodative. They keep talking that the Swiss is overvalued. So here you can see here, as we've declined during April, this big rally, we went to 94. Dollar weakened, Swiss franc got strong. Swiss National Bank moaning that it was too strong, and so we've bounced from 89.50, and here we trade at 91.60 at the moment. So to take this higher again, 92.25 needs to break, and the support at 91.30 needs to hold if we're going to then take that next leg higher. Harun, Martin, dollar, we just did that. Gold, 1 hour. Roslan, we've done gold loads of times. It's not doing anything, even on the 1 hour time frame. So again, unless you're a mean reversing trader, if you're a trend following trader, there's nothing to say get in that gold trade. We're pivoting through 1780. Where's gold gone? So I've got your question if you wanted to listen to your answer. We've got silver, not gold. Where's gold gone? Where's gold gone? There it is. So there we go. Not doing anything. Pivoting through 1780 or 1783 at the moment, but sort of marginally biased to the upside, if you like, simply because we're above the 50-hour moving average. We're also above the 20-hour moving average, but it's not doing very much, is it? Overall, but it's had a bit of a more volatile last hour. But 1783 at the moment. Intraday, if you're trading it intraday, it needs to break out or push this Bollinger Band higher. So 1785 is the next line to the upside. It needs to break and hold, certainly on this 1 hour time frame. But we're having the strongest hour of the day as I speak. So let's see what comes of that. But 1785, next line is Santa. We're above that 1780 pivot. The end of day traders will be looking at here, where but not a great deal of action on gold. He done gold early. He did do gold. I'm happy to talk about it again. Oh yeah, I just got into live. Thank you for the invite. It's all right, my friend. Don't apologise. It's all right. Just I don't know how long you've been here, but yeah. Well, I don't know how you trade this, but as you can see, it's a trend following trade. There's not a lot going on there, is there, on that 1 hour time frame? Might be a bit more action in the the 5 minute and 15 minute traders. You'll be seeing resistance. Okay, so the way to trade this, you can see that here's a good example. You can see the bias a bit to the upside, a bit more exaggerated here in the 15 minute chart. So the 15 minute chart has broken and bounced off the 200 period. So here for 15 minute traders, that's your support there. That 200 period moving average 1782.16 is your support. But again, as you can see, it doesn't want to. It's ticked a bit higher. Had one candle high, and then it sold off quite aggressive. So it really needs to break that. Even here on the 15 minutes, 1784.40, break and push that upper Bollinger Band higher to take it higher. But it doesn't really want to, does it? It's doing it gently, but nothing. There's not a big risk reward available there on that gold on these intraday times at the moment, and so just wait and see. Wait till there's a proper trigger, proper system. The big lines in the sand are these Fibonacci levels from the higher daily time frame. So the 61.8 sits at 1770, and the 50 period Fibonacci level sits at 1797. That's the big retrace we've had on this big rally we had in the daily time frame from April, May, and into the beginning of June, when we went all the way here to over 1900, 1915, and we sold off very aggressively in the last week or so. So it took us a month and a bit to get up there, and we sold 60% of it plus. In the space of a week and a bit. So up slowly, down quickly, typical market move. And here as an end of day trader on the gold market, Roslan, you want to break that 1810 level. So you've got some very key levels on an end of day basis to move up. Not a lot going on in Euro. Again, I don't know what time frame you're talking about, but we've been generally big to the upside today. This is the 1 hour for euro dollar, 119.88 we need to get to if this move up higher is going to continue. It looks relatively robust. US markets have just opened. S&P is up 6 points, 0.15 of 1%. 452. 453. Sorry, 4253, I should say, as the cash market, and euros buys a bit to the upside there. Martin is asking about cable, pound on. Right, okay, I see your question there. So pound on the daily time, right? Two questions. So cable on the daily time frame. So cable, that's pound dollar. So pound dollar here. So just like all the other charts, so it's the other way around because we've got the pound ahead of the dollar. So we moved down very aggressively during June. We were at 142 plus at the end of May, beginning of June, sideways, and then start to track lower earlier in the month. So our first trigger low on an end of day basis, Martin. So hopefully I don't know if you're still short or you've closed your short out. Would have been there on the 11th of June as it's broken out of that range, that 141 break. If you didn't get in that day, it was certainly confirmed 2 days later there on the 15th. So here, the 11th was a Friday, and then it was confirmed here on the Tuesday as it broke out under 141. So we moved all the way down from 141 entry, all the way down to 137.80. 3,000 points, lots of pips on offer there, 300 odd pips, and then we've bounced. And again, the bounce is significant because that's an engulfing candle. See how this candle here on Monday has taken out all of the action on Friday. So again, what you might want to look at is how far is that? Is that a retrace? So you'd really, that's the top, that's the extension of the move here in the last few moves. And so your next target here, from a Fibonacci point of view, coincides with the 50-day moving average. So the 50% Fibonacci level sits at the 50-day moving average at 140.20. So that's your next upside target. And then the 20-day moving average and the 61 Fibonacci level of this retrace of June, the movement down in June, as you can see here from the height to the low in June, sits at 140. What's that? 140, around about 140.69.8. So we'll call it 140.70, and that's where the 220 will be. So that's your two key levels going up: 140.70. And initially, that 50-day moving average at 140.20 zone is really only one break. And it's today, it's back over the 9-period EMA. It's over its 38 less significant Fibonacci level, but it's over that today as well. So it's looking relatively perky, having sold off last week quite aggressively. It's bounced back strongly on Monday. Hang on, it's Wednesday, isn't it? Yeah, Wednesday is the 23rd, yeah. So we're up today. So there we go, on the end of the day. So it's retracing that move. So whether you're actually in this yet or not, when to get in, depends on your system. This particular strategy, for instance, on this end of day basis, wouldn't trigger long until these two had crossed the green and the yellow line, and then it crossed this white line. So it's a long way away from moving back higher or triggering long from here. It certainly was short, and you would have closed out your short yesterday because it's closed above that first moving out, or even today you could have closed it out then as it's broken that second EMA. In fact, that's how you would have traded it if you hadn't got out as it's turned around there with your trailing stop loss building down. Anyway, that's strategies for you. Really much better, that's not a problem. Rosalind says, I see. Thank you for gold, no problem. Vicky says, hello dear, hello Vicky to you. Hope you're well. And my friend Ninja's still here. Have we done $CAD 1 hour? Have we done? I don't know. I've lost track, Ninja. You've been here as long as I have, mate. You tell me. Have we done $CAD? Let's do it again anyway. I think, of course, we have. The move was down. Strong $CAD today. CAD's outperforming. 3-week highs. 1.5% up from Monday for $CAD. As you can see, it's really strongly moving down. So a big old move last week. I've said this 100 times today, haven't I? Monday was a bit of a signal if you're a candle pattern recognizer. There's a tweezer top, nice rally up, big aggressive, too steep. We've come back down. So if it's going to go lower, it needs to break that 50-day moving average at 122.48 on the higher time frame. As far as the 1 hour is concerned, Ninja, my friend, hopefully you're just tracking this lower. It's broken the at 3 o'clock before I started yakking on. We were under the 200-hour moving average, so it's low, but how much further can it go? Well, it's trending lower, isn't it? So where's the 4-hour target? Well, the 4 hours broken the 50 period moving average on that time frame in the last candle, so the 12 till 4 one. So 30 minutes ago, it's been short from yesterday, but it added to your short 30 minutes ago, and the next support for the 4-hour traders is 122.15. So that's your next downside target, depending on the time frame. Wise Ninja, my friend. But you used to heard me say this before because you've been here as long as I have today. Ravi. Haran saying 30-minute time frame. Haran, what were you asking about? I've lost you here. Haran. I didn't do 30-minute, whatever time frame you were asking about. Haran. Haran, stick another question. Stick another asset in the question box there, and we'll get to what it was. I don't know which 30-minute time frame you're talking about. Vicky says, does hot forex give us pending orders detail, stop loss detail, etc., etc.? Vicky, I'm not quite sure what you're talking about. If you're talking about signals, you can generate your own signals with auto charts. You can follow traders with a PAM account. You can use our HF copy trading platform as well to follow other traders. Pending orders. I've been talking about obviously instant orders all the time here, but you could have had your stop loss target here. For instance, on this, whatever this is $CAD and a 4-hour, You could have, your buy stop here at 121.15 to close your short position you'd opened here yesterday on that trigger there. So lots of people trade in that direction. You would have had your stop loss initially sort of, it should really have been there where the market's turned here on my argument. Some people would say, oh, we'll just count back 3 or 5 candles, but you can see if you can't, that's a really good example actually. So if that was your entry candle, if you were counting candles back to say the turn, the low of this 5 or so candles is actually, or the high I should say, is your entry candle. So for me, that's a bit twitchy, that's a bit too close to when it's triggered. So I'd step back a bit further. So where do we take back? So we go back to that point there. So 124 takes us over a psychological round number, 124.10. So that would be the stop loss. That's your entry. And only now, only today, about 12 o'clock, would you try to move your stop loss down to around about that sort of level. So again, it's all about how you trade. That's a trailing stop loss approach. Vicky, learn to do this yourself. Anybody can learn to trade. It's not an intelligence thing. Most people haven't got the patience or the discipline or the wherewithal. To be honest, they don't want it badly enough. Lots of people say they do. They rush at it too much. They don't invest enough. They don't understand leverage and margin and all the rest of it, and can't accept losing. Principally, that's the big thing. People can't accept losing, and some people have problems accepting winning as well, because that's just as emotionally draining as well. Sounds ironic, but it's absolutely true. So Vicky, yes, if you want them, HF copy, follow a PAM trader, PAM account, or get your own with your auto chartist package, and learn to do this yourself. We have withdrawn from offering crypto CFD trading, Robert, my friend. So no is the answer. It's not all the questions. It looks like we've run out of. Bored you all silly, and we've run out of questions on YouTube. Let's have a look at anybody on Facebook, and we got a few people, but not many questions on Facebook for some reason. Houston, we have a problem. 1, 2, 3, 4 questions from Facebook, and I've answered them all. So. We put a post up on Facebook. I'm just looking at our Facebook page here. Why do you hang on to losing trades? Vote in this poll. 85% say they hope it will reverse. 15% say they want to be right. We'll see. There's only one reason you should be hanging on to losing trades, and that's really because it hasn't hit your stop loss. But anyway, people do, and they hang on because they don't have a stop loss, and their losses tend to escalate. Anyway, any final requests before I go? Bruel, right, there's 3 more questions in here. I'm going to do these, and now I'm going to go because I've been here an hour, and my jacket's getting a bit tight, to be honest. And this tie's a bit tight as well. It's a bit hot in here. So, pound against the yen, 4-hour time frame. So, let's have a look. So, we've been down. This is the daily, Bruel. Hang on, let's put Bruel's question up. So cable down into this 137.80 area. You can see we've bounced off here. So the daily time frame is now positive from Monday's big engulfing candle we talked about earlier. Up yesterday and up more strongly today than we were yesterday. So that's the daily. That's the higher time frame. Let's go down to your trading time frame, which is the 4-hour. So this had been short last week, down here earlier in the week, down. This would have then tried to go long. In fact, it's still long. So that would have gone long here yesterday at 8 o'clock. Consolidate, then we've legged higher. Interestingly, the 4-hour time frame is now above the 50 period moving average at 138.70, and that Fibonacci level there at 140.20, the 200 period at 140.40, and that daily 61.8 Fibonacci level at 140.70. The 3 or 4 levels this 4-hour trend could continue to. It's been long from here, and we're just trailing our stop loss up at the moment, and we're over the key candle. We broke and held over the 50 period moving average. As you can see, we haven't been over that 50 period moving average here for the 4-hour candles all the way back here to the June the 10th when we went through it positively. So that's the first break to the upside of the 50 period moving average on the 4 hour since June the 10th. So that's another positive one. So that's biased to the upside, Bruel, on the 4 hour time frame. Okay. Take. Oh, have we? No, we haven't. Oh, we had, Bruel, but I'm happy to say it again because you've just arrived. Right, Talek, final question. Also concerns sterling. It's pound against the yen. You clearly were here before because we were having some fun with the nicknames that pound yen is called. And so let's just do this again. So this is the daily time frame for the guppy, as it's often called, or the widowmaker, or the housebreaker, as my friend Wise Ninja calls it. We were down aggressively last week under the 50-day moving average. And again, a significant break at that point. But we had a significant candle formation on Monday, an engulfing positive candle on Monday, back through the 50-day moving average. We're breaking now back into the upper half of the Bollinger Band on the end of day basis. We obviously can't make a decision on today's candle because today isn't finished. So yesterday was positive. We haven't recovered all of that sell-off, but it's still quite significant. So again, a little Fibonacci level on that level there, assuming that this move down is completed now because we've spiked all the way down there at 151.25, and there we are. That was a significant close yesterday. We closed over the 61.8 Fibonacci, the golden ratio of this sell-off from the end of May for June. Actually, it's all of June, isn't it? All of May. All of June, sorry. So that's a significant retrace quickly. As we obviously went down quickly, we retraced quickly. So we need to break over here. 155.80 is the high from June. We'll be looking at to the upside. First resistance is really this level here from last week, 155.20, and it's that's looking pretty positive at the moment. So guys, that's all for now. Let's just have a quick check of what the data is still to come. Where's my data? Much left today. We had Canadian retail sales earlier, didn't we? CAD sales, quite a big miss. So we had a strong Canadian dollar today in the last few days, but we had a big miss for Canadian retail sales. Came in at minus 7.2%. The core number, the core's more significant than the headline number, but big number. Where are we? 47. In fact, so the main news of the day, in fact, US PMI, I'm just about to go, have just come out as well. So manufacturing PMIs, the first release for the month for manufacturing PMIs for the US is better than expected, better than last time as well. So it's come in at 62.6. It's better than expected. It was expected to dip to 61.5, and last time has also been upgraded to 62.1. That's positive number. If I just click on that, it'll show me how good that's been. Yeah, that's the best in a long time. So all the way back, obviously it's a huge, big resurge in manufacturing in the US. So big, strong number, 62.5, beating expectations. Services, more important because it accounts for 80% of GDP in the United States. The services sector has come in at 64.8, so a bit of a dip for services now, quite a significant dip. It was expected to hold the 70 level. 70 is a really strong number for a PMI reading. Last month was in line at 70.4. That hasn't been re-evaluated, but quite a significant dip for services, a good beat for manufacturing. So overall, a bit of a mishmash for US PMIs, particularly, and the services one has brought it down, but still a very, very substantial expansion in activity across most of the PMIs today, most of them quite strong. Other ones to watch was the German manufacturing PMI, came in just shy of 65 today, so manufacturing bouncing back more aggressively than the services sector. And again, you might expect that it's much more difficult to work from home in the manufacturing sector of course, than it is in the services sector. So some good PMI data today across the globe. Some have missed, some have been in line, but that US data was pretty strong for the day. So that's all for now. Take care, everyone, and join Andrea tomorrow for the weekly claims. They're expected to come in tomorrow, 385,000. Remember, the last 2 weeks, they've missed expectations, so hopefully a bounce back for claims tomorrow. Durable goods, US GDP as well, and obviously before all of that, before all of the US data, we've got the Bank of England and their Super Thursday. What's their inflation outlook going to be like? They're talking about, it's expected to be obviously no change in interest rates, but there'll be some technical change to the QE program. Markets might again got ahead of themselves that the Bank of England were going to follow through a bit more hawkish than the Fed, than they were expected to be, given what happened to the Fed. But the Fed have probably taken a lot of the sting out of that for them. So see what Mr. Andrew Bailey and his colleagues have to say. It's the final meeting for Chief Economist Andy Haldane. So big bull hawk on the Bank of England committee. He's leaving. This is his final meeting today. So take care, everyone. Stay safe, and we'll see you all again next time. All the best, everyone. Bye bye.